The first source of personal loans is national banks. You may have heard of these name brands when it comes to personal loan programs: U.S. Bank, Wells Fargo, and Capital One. In fact, you may have already transacted with one of these banks. That would make borrowing from them more attractive for you because you already trust them. It's not just the big banks anymore where you should look into. There are now some good online banks that offer nationwide service and provide a variety of loan products to choose from. The pros are pretty clear. Big name banks can offer a ton of options. You can have your pick of terms, length, fees, incentives, and other offers. You'll probably find it easier to choose a loan that really suits your needs and preferences. What's more, these big banks have facilities that provide convenience for borrowers, such as online bill payment and a 24/7 customer helpline. However, big name isn't always synonymous with big service. In some banks, it may be difficult to talk to a bank manager or loan officer in person or by phone. In some cases, they might refer your account to a low-level employee or an inexperienced bank agent. These people may not have the authority or flexibility to grant exceptions, or might have to follow strict rules and guidelines for your credit scores and borrower eligibility. You will find it more difficult to get a personal loan from them when you have fair to poor credit. The next place you can get a personal loan is credit unions. Credit unions remain to be in the forefront of the personal loan industry, although they issue lower loans than banks. Membership is the key differentiator between a credit union from a bank, so in order to qualify for a loan, you have to be a member of the credit union. On average, credit unions charge lower interest rates than banks. Another advantage is their location. On average, credit unions charge lower interest rates than banks. Another advantage is their location. When you have a question, you can just drop by your branch and talk face-to-face with an expert rather than just doing it on the phone. Many borrowers also prefer the personal touch of a credit union, including the flexibility to tweak your loan terms and conditions to suit you better. You might be used to paying online or checking a loan balance via the internet, but it may not be applicable to a credit union. Some credit unions remain old school and have not yet invested in such technology. Smaller credit unions usually carry fewer products and services compared to bigger ones. Make sure that your local credit union has the product that you really need. Online money lenders is another type of lender to consider. Do you want to get a loan without leaving your bedroom? You can get a loan real quick from an online lender. It's so fast, sometimes the money is even in your account the next business day. However, there are many things to consider before taking such loan. Due to the cutthroat competition in the personal loan market, online lenders try so hard to distinguish themselves from traditional lenders. Some of them have innovative lending guidelines that skip traditional credit scoring models or offer extras like flexible payments, waive fees, or schemes to lower interest rate during repayment. Online lenders like Earnest, Lightstream, and SoFi focus on strong credit borrowers by offering high loan amounts and low interest rates. They normally consider credit scores of 690 to 719 as good, while a score of 720 and above is excellent. See how your credit score is calculated. Other lenders will try to catch borrowers with less than perfect credit. Avant and Lending Point are two of them. Rates will be higher, of course, but it is easier to get an approval if your credit score is just average, 630 to 689, or bad, 300 to 629. Online money lenders are fast and easy, plus there's not too much paperwork. You just simply key in the information and wait for approval. It's the best alternative for those with poor credit because these lenders position themselves to work with bad or no credit. However, some of these lenders may charge out-of-this-world interest rates. Do not be surprised if you find that some charge 100% APR or even more. Once you are caught in, it can be very difficult to break out because the fees cost will keep piling up. In many cases, it would be better to first exhaust all other options.